So you've been thinking about real estate investing, but you just don't know where or how to start. And honestly, that makes sense because when people say get into real estate, they rarely tell you which real estate. Rental properties, flips, Airbnb, commercial, multifamily, wholesaling, land. There are hundreds of strategies, making the entire topic feel confusing, overwhelming, and almost impossible to break into. And then comes the biggest problem of all, money. Because most people believe real estate investing requires tens of thousands of dollars up front, huge down payments, strong credit, bank approvals, inspections, agents, and months of waiting just to close one deal, so they never start. But what if I told you there's a real estate investing strategy that requires little to no money to begin, has a low barrier to entry, can work even if your credit isn't perfect, moves faster than traditional real estate, and can generate some of the highest cash-on-cash returns in the entire industry? A strategy that quietly creates wealth, but almost nobody talks about. Today, I'm going to show you how to invest in mobile homes. And by the end of this video, you'll not only understand one of the most overlooked wealth-building opportunities in America, you'll be motivated to take action immediately. Let's get into it. Why nobody talks about mobile homes. When most people think of real estate investing, they picture single-family houses. They think of buying a home for $400,000, putting 20% down, dealing with banks, and renting it out for small monthly cash flow. What they don't think about is buying a mobile home for $5,000, $10,000, or even getting one for free, then turning it into a monthly income-producing asset. Why? Because mobile homes have stigma attached to them. People assume they're low quality. People assume they're risky. People assume only low-income families live there. And because of that stigma, most investors ignore the space entirely. And whenever the masses ignore an asset class, opportunity gets created. That's exactly what happened with mobile homes. Why mobile homes are different. Here's something most people don't realize. Many mobile homes are considered personal property, not real property. That means unlike a traditional house attached permanently to land, many mobile homes are treated more like vehicles, with titles that can be transferred. This creates huge advantages. Faster buying process, easier transfers, lower prices, less competition, flexible financing opportunities, fewer institutional buyers competing with you. Banks often don't love lending on older mobile homes. Large hedge funds usually focus on apartments and single-family homes. That leaves room for everyday investors. This market often gets overlooked because it doesn't fit the traditional mold. And that's where opportunity lives. Now let's answer the biggest question. How do you start with no money? Here are practical ways. 1. Find free mobile homes. Yes, free mobile homes exist. Why would someone give one away? Because they're behind on lot rent. Because they inherited it and don't want it. Or because it needs repairs. Maybe they moved out. Or because they'd rather walk away than deal with it. Some owners just want relief. You can find these deals through Facebook Marketplace, Craigslist, local classifieds, driving mobile home parks, calling park managers, word of mouth. You'd be shocked how many people say, if you move it, it's yours. Or, take over the lot rent and it's yours. That can be your first deal. 2. Use sweat equity. Instead of cash, use time and effort. Clean it out. Paint it. Fix the flooring, repair cabinets. Landscape the lot. Sometimes a few $100s in elbow grease can create thousands in value. 3. Partner. With someone you find the deal, someone else funds repairs. You split profits. That's how many investors start in every niche. The fix and flip strategy. This is one of the fastest ways to make money. Let's say you acquire a mobile home for $3,000. And yes, you most certainly can get a mobile home for this amount. You put in $2,000 in repairs, paint, flooring, cleanup, minor cosmetic upgrades. Now you're all in for $5,000. You list it for $14,900. Let's say that home sells. That's a 66% profit margin, a number that most real estate investors dream of. Because the average cash-on-cash return for flipping a single-family home is somewhere between 15% and 30%. And unlike flipping single-family houses, you're not usually waiting months for bank approvals, appraisals, or complicated closings. A buyer can often purchase quickly, usually within a day. Title transfers can be simpler depending on jurisdiction. That speed matters. Velocity of money matters. The faster your capital returns, the faster you can repeat the process. Now, the seller financing strategy is a very powerful wealth builder. This is where many mobile home investors level up. Instead of selling for cash, you become the bank. Example, you buy and rehab a home for $7,000. You sell it for $19,900 on payments. You create a note similar to a bank giving you a personal loan with a principal amount, interest rate, and an amortization schedule with a payoff date. Buyer gives you $3,000 down payment, $500 per month for several years. Now think about that. You may recover a large portion of your investment upfront, then collect monthly cash flow. That down payment can fund your next deal. This is how investors snowball. One home funds two. Two homes fund five. Five homes fund 10. That's leverage without needing traditional banks. Now let's move on to notes, defaults, and repeating the process. When selling on payments, documentation matters. Many investors structure the deal with proper legal agreements, title security, payment terms, and compliance according to local laws. When done properly, if a buyer stops paying, remedies may include repossession or reclaiming the asset depending on state laws and whether it is titled as personal property or real property. Then the investor can clean the home up, resell it again, collect another down payment, restart monthly payments. That's why some investors love notes. The same asset can generate income multiple times over years. Important. Always work with a qualified attorney or title professional in your state because repossession, eviction, and installment sale laws vary significantly. Mobile home parks and lot rent. Most beginners don't need to buy land first. You can buy homes already located inside mobile home parks. The resident or owner pays monthly lot rent for the land. That means instead of needing hundreds of thousands to buy real estate land, you can control an income-producing asset sitting on rented land. Benefits: lower upfront costs, existing utility hookups, existing community. Easier entry point, lower maintenance than full land ownership initially. This is why many beginners start here. How to scale into your own mobile home. Park. Now, once you gain experience, the next level is owning the land too. That means buying acreage or an existing park and placing homes on it. Now you can potentially earn from lot rent, home payments, home sales, appreciation of land, utility bill backs depending on setup. This is where scale happens. Instead of owning one home, you control an entire community. That's why many sophisticated investors eventually move from single homes to park ownership. Mobile homes versus single-family homes. Let's compare. Single-family home, example. Purchase price, $350,000. 20% down equals $70,000. Closing costs, mortgage approval, appraisal, insurance, longer closing timeline. Maybe cash flow is a few $100s monthly. Mobile home. Example, purchase price, $10,000. Repairs, $5,000, total in $15,000. Sell for $3,000 down, $500 per month payments, or rent it out depending on local rules. Which gives a better cash-on-cash return? Often mobile homes can outperform because your basis is so low. Smaller dollars in, strong monthly cash flow out. That ratio can be powerful. Why most people stay away. Most people avoid mobile homes because they don't understand the business. They think it's beneath them. They believe stigma over numbers. They only chase glamorous assets. They assume low price means low opportunity. But investing is about math, not ego. Cash flow doesn't care about appearances. Returns don't care about stigma. Opportunity often hides where pride refuses to look. Low barrier of entry. This niche can be attractive because compared with many traditional real estate strategies, it may involve lower purchase prices, smaller repair budgets, more flexible seller deals, lower credit dependence in some transactions, faster transactions in certain cases, less competition than conventional housing. That doesn't mean risk-free, it means accessible. And accessibility matters when you're starting. Why speed matters. Traditional house purchase, agent negotiations, financing contingencies, inspections, appraisals, underwriting, delays. Mobile home title transfers in many situations can move much faster. That speed allows you to rotate capital faster, do more deals annually, learn quicker, scale quicker. Time is a hidden cost in investing. So if you've been waiting to start real estate because you thought you needed perfect credit, or $50,000 saved, or approval from a bank, you may have been looking in the wrong direction. Mobile home investing isn't flashy. It doesn't get bragged about online. It's not the strategy people show off at dinner parties. But for many investors, it can be one of the fastest, lowest barrier, highest cash-on-cash ways to build momentum in real estate. The question is, will you chase what looks impressive? Or what actually works? If I were starting over with a little money today, I'd be studying this niche immediately. Because hidden opportunities don't stay hidden forever. I hope this information changed your perception about real estate investing and that you gained a ton of value. If you enjoyed this video, subscribe and comment Mobile Home Money if you want more strategies like this. And I'll see you in the next one. Thanks for watching.